Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, October 28th, 2022. So now we have all the big earnings out of the way. We are certainly past hump week for earnings season. Peak earnings are over, and so now the market obviously it's rallying today. But I'm going to take a look and show you some of the levels to watch, where we might be going, what developments to look for, and then I'm going to roll into trade ideas, both some new trade ideas as well as some updates. We'll hit on natural gas. Time permitting, I might get to crude oil. Wheat looks interesting right here. I'll get to that one in a second. I'll do a quick update on Treasury bonds and the US dollar, gold, Bitcoin, and Ethereum. It's a lot, so we'll get into this. I won't go into any one thing in too much detail, otherwise it'll be one of those super long videos like we had yesterday. Speaking of yesterday's video, the one I did last night, showed you we were here. As I always like to say, support is support until unless broken. That's where after a little spike down following the Amazon miss, then you had Apple beat, and we were trading right here back up on support. And again, that's a big level. That was the previous bear market high back in mid-June, and so far another successful defense, and it keeps a near-term uptrend going. Turn off all the lines. Say what you want about how bad some of the earnings were. 4 out of the 5 got beat down hard out of the big FANG stocks, but of course Apple, which is by far the most important of all of them, they beat and they're rallying today. And so this is it. So we have still the makings of a near-term uptrend, and that's still that little dip down below. That brief one-day pop proved to be a bear trap, and so far is a bottom. And there's the bullish engulfing candle. So this rally, never trust a bear market rally. It can end at any moment, and I'm going to show you those levels and what to look for to see if it does. Otherwise, as of now, like I said, it's just hard to make anything but a near-term bullish case, because we're still making a series of higher lows and higher highs in the market, especially the beat-down tech sector. That's where you have more catching up to do if we are going to rally up to those downtrend lines and 200-day moving averages, potential max bear market rally target for this time around. So you'll get, again, much more bang for your buck, I believe, than trading SPY or even the small caps that have been strong lately. All right, let's go down a little bit. Shorter time frame here. These are those purple lines I gave you week before last, and they still, we continue to ping pong. So that's where we opened today. We had a visit down to the lower level. Again, on my after hours trades are turned off, but you could have bought the Qs there at the 269 support. That's what held, so you can't see it here because that was after hours, and we rallied. And look, right now it is an objective shorting op, a great time in my opinion, and I laid on some pretty heavy shorts right before the start of this video for this reason. You've got a big level here. Again, it was a level laid out a couple weeks ago, 279.50, and we're right there right now. You do have a potential bullish crossover on the PPO coming if we go up much more than that, but again, resistance and a pretty big run into it, and I'm going to show you another reason I think we'll see some profit taken from here, and that's why I wanted to start out with the markets in the beginning. Look at NQ, NASDAQ 100 futures. You have a key downtrend line that comes off the mid-August highs right here. This is our very important downtrend line. Tried to circle it. 1, 2, 3, even 4 distinct reactions, and that's coming up there. Now, obviously bullish if it breaks out above it, but also you have a big resistance level at about 11,784. So a lot of work for the market to do on the upside. So far, this is really where we've been grinding around, if you look at it that way, since mid-September now, kind of in this range here. And it does have a bit of a IHS look to it, inverse head and shoulders pattern. If you use this as a neckline, this is a left shoulder, this is a head, and this is a right shoulder. And so that's certainly a possibility, and those are things we look for, we watch. If we do break the trend line, the downtrend line that is right there, then you have big resistance at 11,785 that I would put very good odds on at least a reaction, at least a minor reaction on the initial tag, if not a complete rejection. We'll see. But as of now, I showed you a minute ago, some resistance we're at. I'm going to zoom it in. That was QQQ. This is the NQ, my NASDAQ 100 future 60-minute chart. And you can see here we're coming up on a nice resistance level 2 at about 11,541 or so. Right there, we have a lot of reactions on that level going all the way back to here. Bounced off it, then it was support, 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 finally broke. Support once broken becomes resistance, resistance, resistance. We've kind of traded on and around it, bounced around it there, broke it again, couldn't get above it, and the bottom of the market fell out. Rallied back to it, got rejected. Tried to recover it, smacked down. This was all in front of FANG earnings, so the market was kind of choppy. Had a few whipsaws, but regardless, there's enough reactions to make that and the resistance level, the downtrend line just above it, plus these two reaction highs. So you have a whole confluence of resistance here, and today I chalked this up to, and of course, look what we hit. There was that big 1101 I've been talking about for a while and trading off of. That's what we hit last night. This is undoubtedly a lot of short covering. A lot of, I can only imagine how many people loaded up on things like SQQQ and all that when they saw how the FANG earnings were coming out. And the fact Apple pretty much saved a lot here. But remember, it was also technically induced. I'm going to show you some levels in just a second. Before we move on to that, let me show you a quick zoom down to a 10-minute chart. This is a 10-minute time frame on NQ, and you can see right here we have all these reactions on this level here. One, two, multiple there, actually a lot of reactions. Again, we've been trading around it, but it's been really acting as a support slash resistance level, mostly resistance, and we're there again. Maybe a brief momentum fueled overshoot. That's to be expected when you have a near vertical ascent, and you're starting to get, if you zoom down very tight, in like a 5-minute, you'll start to see some divergences forming on that short-term time frame. We haven't had any yet, so there really hasn't been any a decent case to for a pullback trade yet, but now we do. This is it right there. I just drew your divergence lines, 5-minute chart there at resistance. There's a steep uptrend line, and boom, come down here, probably come all the way down to that 11,357 level right there, at minimum 11,434. So if you're looking for a quick pullback trade, that would be it. The S&P 500 futures. This is a 60-minute chart as well. Mid-August highs, same thing. We have a primary downtrend line off the mid-August highs, lots of reactions, 3 right there, another big, very distinct reaction high right there, and we're coming up to that now. Anything is possible, but from my experience, when you've spent this much energy to get up to a key resistance level, at best, if you pop it, it's going to be a brief overshoot, and you're going to come back and at least back test it, if not get rejected. And I'm favoring a rejection there. In other words, I'm very comfortable shorting here today at 30. That's 3,900 and the downtrend line. And again, you can short ES, you can short NQ, or you can wait, and if you're bullish, and wait for a breakout. But to go long right here would be completely contrary to trading, at least the way I trade. You don't you short rallies into resistance, or if you're bullish, you wait for a breakout above resistance. You do not buy right before a strong rally into resistance, because a pullback is likely. All right, and to additionally support the case for short here, you have Apple right here. I'm going to just go over the 60-minute charts. Apple's Apple. They're like I said, it's by the reason it's the only $2.5 trillion company out there without even a close second is because it is just a complete earnings juggernaut, and they continue to by far have the best relative performance, even though it's down in this bear market, down year to date. It's down a lot less than the other big FANG stocks. But with that being said, all right, there's some resistance here right there coming up at about 157 or so. You can see you also just kissed the 200-day exponential moving average, but I wanted to show you the rest of the lot here, the other big FANGs. And yeah, Microsoft, here's your primary downtrend line off that mid-August high. We had a false breakout here. Those that take breakouts right before earnings, I don't know who they are. I'd love to meet them, but that's just a gamble, because as I often say, breakouts that occur right before a company reports earnings, they have a much higher risk of failing. Their earnings are either going to go their way or against it, and it went against it. It rallied right into resistance too. That's 250. Got rejected, and it popped back below. So the trend line's still valid. There's still enough reactions, and we just hit it, as well as that almost 235 resistance. Why is that resistance? Because it was support for weeks here, at least several days. That is, as a 60-minute chart. Then that support once broken, you had a big drop. Then you back tested it, got rejected. Then it was support once you recovered it. And so we've been trading through there, but it's been working very well as a key support and resistance. Obviously, bullish if Microsoft breaks it. And there's that, another run up to 250 would be logical. But again, it spent a lot of energy today to get up there, so I'm favoring a rejection, and that's one more reason I think a short right here is worth it. A shot with stops somewhat above, somewhat relative to whatever your targets are if you're going for a quick pullback trade, or if you're thinking maybe this is it, a little head fake before the next leg down. Alphabet, this is a Class A shares, GOOGL. Look at that big, that was the bottom right there. That was support. We had positive divergence, everything ready to roll. People started buying it in front of earnings, just thinking because the market was rallying that everyone else must be right, and then boom, they got smacked down. And so all those longs, all those bulls that tried to pick a bottom here in front of earnings were trapped. What happens? That's a pretty powerful thing in technical analysis. So right now, it was key support, and support once broken becomes resistance. So here's another reason. Look at that. We gapped down below it. It negated those positive or aka bullish divergences by taking it out, taking out lower lows in the indicators, and that was again triple bottom support there. Broken, and now it's resistance. So again, no guarantees. Obviously bullish if it can clearly get above that level. There's still a gap, big old gap to contend with. That's going to be resistance, the bottom, and then the top of the gap. But as of now, we are at that stock number 2. They're at resistance, at least number 2. Amazon, same thing. Look at Amazon. I mean, this was if you can't recognize that as a key level, 101.93, we'll call it 102. I don't know what is. That was 1, 2, 3, 4. Each of these back then, I pointed each and every one of those pullbacks level is objective long entries, and saying this is one of my favorite of the FANGs to buy. We hit the first 2 targets on that first trade, then I put on again, gave you this one, and then we hit that final target there. So we milked those bounces, even got out of that one and got back in here. At least I did, and that's what's posted on the site. But again, the point I'm trying to make is that's a very well-defined resistance level. Amazon gapped below it yesterday, and all they've done today so far is run up to back test it from below. So obviously, yes, if they can recover it, clearly recover it, not just a little intraday pop or one-day pop and then a fade, but get back up in there. Yeah, they've got a big old gap to backfill, and then that's also bullish because that's a false breakdown, break below support and then a recovery, but that hasn't happened yet. And so again, my money right now is on a hard fade from all these key stocks coming into resistance. There's Alphabet, I already covered that with the other share class. Breakdown, back test, boom. Tesla doing its own thing here. Well, there it is. Tesla looking better than the others, but you can see here there's a case of one that after earnings did go down and took out the previous lows, but then recovered it. So that's constructive there. I can't really knock Tesla right now. It looks like a constructive chart to me. But again, the others are at resistance. So enough on that. Made the case, you take it, don't take it. And again, if you're bullish, then wait for all those levels to be recovered, and then because that's going to be a bullish technical development. If not, it's possible this could prove to be one of the best shorting ops in a while if this is all the market has left in it. People buying the Apple beat and forgetting about the rest of tech falling apart, and it's a clear trend. I mean, take a step back. Don't, the media and the bobbleheads on TV and all these folks, they want to pick bottoms. This is how they're wired. It's in their nature. Most fund managers and pundits, they only go long. They're not there. They rarely talk about shorting stocks on TV. So they're always looking for a bottom. And again, this is one of the best technical setups in a while. And to me, it's still just a matter of, are we going to get a decent tradable bear rally, or is this going to be it? And then we go down before the next decent bear rally starts, because there's still My most reliable indicators, such as the VIX, the put-to-call ratio, and other things like that, have yet to trigger anywhere near levels that tell me that the bottom is in. So to me, it's just, hey, we're going to trade a bear market rally here again, like we traded these two. Like I said, despite today's action, I'm still leaning this way, but I told you, keep it light. I'm just hit and run day trading. I've got like 3 trades today. Came into the day long, closed that one out this morning, had one little pullback, but right now the short I just added on is still pending, so we'll see. I haven't hit my target, nor have I been stopped out. Just entered that one. Natty Gas still favoring a move up to T2. We had a pullback as expected. I posted that again in the comments section that day under that post after T1 was hit, showing you 3 pullback targets, a third of which we just slightly exceeded, but I'll show you what needs to be done here. I'm not liking the fact my final pullback target was right about there, but I'm going to zoom down. That was given on a 10-minute time frame. But we are still, we still have the bullish falling wedge breakout, the divergent low, and everything else, and nothing goes straight up. Things usually zigzag to get to your target, and that's still T2 up there. But when you drop down to the 10-minute time frame, that's where those pullback targets were given. There was the bigger breakout. T1 was somewhere in here. We're zooming down now. But you had this minor uptrend line. That's what I pointed out that day. Expect a pullback, and we got it. And I did add. I think these were the 3 targets I had, if I'm not mistaken. I've added lines, you can see, because I'm actively trading it. Pulled back, hit that second target there, bounce, hit the final one right there, 5,726. So I will say I'm not crazy that we're below it, but I'm still hanging on to that one because I re-entered after shorting it after that, from the T1 tag. But see this? We have nice positive divergence, just like we had negative divergence here, and we had a correction, and we had positive divergence there, and we broke out, and we had a nice rally. So what we need to do now, most importantly, so I'll tell you this, if I didn't have a position, I would hold off wait to see this level recovered, 5.726. If that gets recovered, you also have a downtrend line. This gives you a bullish falling wedge. So there's your BOD line. You break out above that, and then it would work something like this. Go up there. There's another potential trend line, and ultimately come up there. Just the simple fact, if we can regain that by a pretty good margin, that 526 level, that's going to be a powerful thing, in my opinion. That'll be a bear trap / false breakdown, because that's pretty good support. So again, not crazy about it, giving it room because it's still above the original entry there, and it's just like I showed you, things go up, they go up and down, they zigzag their way up. But if we go much lower, a couple things are going to happen. You're going to take out the divergence, which doesn't help the case here, at least on the 10-minute chart, and you're going to take out that previous low, and that's not good. So not in love with it, but still favoring a run up to T2. I'll be a little more in love with it again if these levels get taken out, which means I'm going to add to it. That's what that means. And UNG is the primary. There's couple of nat gas ETNs. This is the big one, first to market. And the case here too is it's big support. That was resistance. We had one little false breakout. Was resistance there, was support there, it was a major reaction low there, and that's what we fall into. PPO wants to make a bullish crossover, it just hasn't done it. It had a rejection, it tried there, failed at the trend line. It's trying again, so if you can get a bullish PPO crossover, the last time we had one, that was a whipsaw there. There was the last one right there, and you can see nat gas from that point went up about 67%. So we'll watch for a bullish crossover, and more importantly, a successful defense of that 17. There it is. So when you zoom in, that low I just showed you on the 60-minute chart of natural gas futures, that's it right here on UNG. So you really ideally want to stay above that, or there's really not a case to be buying it. Now, if you drop it, they clear the stops, and then they recover it, then you can jump back in. That's what I'll do. If I'm in a trade and I get clipped, I realize my stop might have been too tight, I go usually give it a little room. No big deal. You can always get back in if it proves to be a whipsaw. Okay, and here's crude oil setting up. You have I'm going to zoom in. This is a 60-minute chart. Let me zoom in a little bit for you so you can see it better on the video. We're going to take it here, show you this trend line, which is a potential downside target. There's your primary uptrend line off the mid to late September lows right here. Lots of nice clean reactions. We recently put in a divergent high on the 60-minute time frame, negative divergence, and then we went on to break down below this bearish rising wedge pattern right there, the sell signal. This level about 88 and change is resistance, and this is support 87. I have it at 87.28, give or take. Previous reaction high, support there. Back test of it there was support and resistance right there, so a pretty decent level. And if you zoom in even tighter, it looks like a little head and shoulders pattern forming there. That would be your neckline. This would be your left shoulder. That would be your head. That would be your right shoulder. So break of that level. Measured target's going to be the width of the widest part of the pattern. Probably, first stop is 86, second stop be 85, and or that uptrend line. So that's your swing target right there. If hit from where we're at today, I can't grab the line. That's where you might want to wait for that to break unless you want to jump in early. Sometimes I'll do that, take a starter position in anticipation of a breakdown and add to it if it happens. That's about a little over a 3% drop there. 10-minute chart looks like this. You've got the same wedge here. We just zoomed down to 10-minute time frame, bearish rising wedge. We've kind of had the small falling wedge, been moving around, but again, you just need to take out that those lows about $87, and that should open up a move down there to that target. Okay, well, wheat looks to offer an objective long entry. A lot of these commodities, most of them have been in correction mode. The Fed has been aggressive with rates, and I think and rightfully so. It's been a great bull market run in a lot of commodities, and they're taking what I believe just be bull market corrections. Nothing goes up forever. A lot of these got ahead of themselves. But this is the wheat ETN, WEAT. And that's a primary downtrend, primary uptrend line. That I've highlighted pullbacks to that thing along the way as objective long entries. We had one little spike through it on this correction. There was a momentum-fueled overshoot, but you put in a divergent low and wheat rallied. And now we're back to that trend line. So it's simple. You don't overthink it. You buy pullbacks of support. If you take it out, give a stop a little bit below that 850 or 833 is pretty good support, somewhere below there. You also have the PPO making a back test of the zero line. This usually delineates bullish and bearish trends. When you're below it, the trend is bearish. When you're above it, the trend is bullish, and sometimes, or quite often, when a bullish trend, you'll bounce. Sometimes it's a little below. I'll usually take a line like this and add it. If that line a little below the zero line, that tends to be what delineates the trend there. You can see we tend to bounce on that. It's about 0.071. And then wheat futures, if you trade them, they have quirky trading hours, but if you already trade wheat futures, you know that. They don't trade the same as a lot of equity index futures. But you have a decent support level here, a support zone about 817 and 3/4 up to about 823 and 3/4 right there. And you also have positive divergence here on the 60-minute time frame, just like you had negative divergence here at that high, followed by a correction. You had a small divergent high right there, a little correction back to that same level. So here we are. So you buy it at support. That'd be your first target right there at about 863. And or if you're looking at the bigger picture, so what's going to happen here if the stock market continues to rally, that should be inflationary. That's going to say everyone's okay. Everything's okay now. Economy is going to rally. Economy is going to pick up strength. Again, that's what it's implied if people are buying stocks, and so therefore that should reflate the commodities trade. This is going to be the bane of the Fed for a long time. Every time they think they're going to see a little abatement in inflationary forces. I've made this case over and over. I believe we're in the early stage bull market action for just about all commodities. And multi-year bull market we're probably looking at in a multi-year inflationary trade and interest rates going up, but you're going to get these abatements, and the market's going to rally thinking that the whole inflation thing is now under control and the Fed will back off a little, and then what's going to happen is commodities will go back up again and people are going to buy these. Institutions are going to buy these. You should buy these because the charts are constructive. Now it's, I'm talking more speaking as a trend trader. So, this entry here, you can either bounce it on those short-term targets I gave you on the futures, or you buy the pullbacks to this trend line, you keep doing that, and the bull market to that trend line is no longer good, or there's a lot of evidence that we just put in probably started a new bear market. But right now, again, this just looks like bull market corrective action so far. Treasury bonds, there's not much to update there. I am still longer term bullish. You know my targets. I've covered them in other videos, so I'm not going to cover that now. But yesterday I pointed out we were getting these divergent highs and looking for a pullback, which we got. So I hit my targets overnight. They took me out. My pullback targets were hit. I mean, so it took me out profitably on the shorts, and I'm scaling back in, but I'm doing it I'm not back to the full positions I was when I closed out yesterday, because we hit those here. Where are we? The downtrend lines, these targets here. Remember, ZN, this is ZN, the 10-year hit resistance, good resistance, and there's a pullback, and that's I think what I said yesterday. That would be the max pullback target, so I had my stop a little bit above that, and I'm sorry, the buy to cover order for a short. So it is objective. You can buy down here. I'm just going to scale back in, and then obviously once we break that, it should take us up to the next target there at 113.276. And you remember too, you look at yields. TYX is the 30-year yield. That was the other reason, for expecting a bounce. This has been bullish. Remember, yields work inversely to bonds. So the 30-year was rising. The 30-year bond, its rates were falling, but we just hit support. That's the first tag of this trend line in a while since this blow off top. I think it'll be short-lived because this is a little parabolic top, and then we'll break it. And once we break it, that's your next buy signal on Treasuries, where to me it's an all in back to a heavy position. I'll continue to scale in, add to my positions if and when that breaks, as well as I watch TNX. I told you up until yesterday I spread it out. I had a spread between the 5, 10, and 30-year. I'm only going back into the 10 and 30s at this time, because I think the 5-year has already priced in enough of the Fed backing off. So I see more. I think there's more potential, in my opinion, on the 10 and 30 years. If the chart dictates, I might revisit some exposure in the 5-year, but probably not until after the FOMC meeting. These two I think I'll carry some into, because you had TNX, the 10-year yield. You did break the trend line already, and there was a bearish rising wedge pattern. Again, that's the yield on the 10-year, so that should take us down. Even maybe we backtest, maybe not, but still, this is my next target on TNX. And again, the ETFs or IEF, which is the 10-year bond ETF. So this is just an inverse of the yield of the 10-year bond, and that's where I think it's going. So still plenty of meat left on that bone. Again, it doesn't sound like a lot in percentage terms, 3.3%, but you can take a much higher position in this than you can in the equity markets, because Treasury bonds don't go up and down as much. So anywhere from 2 to 4 times what you might trade in SPY or QQQ is usually sounds about right, based on the expected volatility. Okay, quick update on the dollar. I remember we put in this divergent high, and then we had a sell signal, a pretty good one, when we broke that trend line right there. And the last update I gave you, we had hit my 13,288 support. So reaction was, and still is, and we already, forget about it was being likely, we already had it. That's the reaction. We hit it one day, we hit it again, traded on the next, started a rally, a little bit of a rally here at most, and I don't think we'll get that far, because this was a crowded trade. Remember, the Fed is on deck for Wednesday of next week, so there's going to be volatility here. You don't want to put a big bet on dollar sensitive assets, such as, if you're trading the dollar or the euro or any of the other currencies, number one, but then things like gold and even crude oil, natural gas. But ultimately, I think this will go. I think it'll go after, either before or after the Fed meeting, and that's the next target on the dollar, the downside to this trend line, and then ultimately down here to the longer term primary uptrend line and support right there. So looking for quite a bit more downside in the US dollar in the coming weeks to months. And then the euro is just the dollar upside down, really, because the euro is the largest component. And in the last update I showed you, we took out this trend line there, and then we rallied right into that 100 1.00 893 resistance. It was good resistance, so therefore we had a reaction. So you broke out. Now you're back testing. If we fail the back test, there's still an uptrend line here, so I'm willing to give it a little room, and maybe a little more like that. But ultimately, I see more upside in the euro US dollar pair all the way up to that primary downtrend line. So again, this is just like the dollar chart in reverse. So keep in mind that gold tends to go up when the dollar goes down and vice versa. Or another way to say it is gold tends to go up with the euro. So if this happens, then that's going to be bullish for gold and silver. I'll do quick updates for you there. Like I said, until the Fed's out of the way, you're going to see some volatility. And I pointed out the other day this bearish rising wedge on the 60-minute chart. And it played out. There was a divergent high. We had an uptrend line. And so that's what happened when you broke the wedge. You had impulsive selling. It's carried us down here. I'll put a level right now. That's a previous reaction low. Again, gold and dollar sensitive assets are going to be choppy up until the Fed. But as of now, we're still bigger pictures are coming off this divergent low. There's still big resistance on the daily chart we need to get above before we can really firm up the longer term case for gold. But near term, we had this divergent low, and we're just zigzagging higher. So if we can hold this low, then we still have the makings of an uptrend, which is a series of higher lows and higher highs. Now, if we take out, move much below here, well, you've kind of mucked it up. It doesn't mean it's the end of the world. You're still above that low as long as you are. And that's a big one because that's our double bottom low in gold. So as of now, I'll tell you this too, the wedge has played out almost to the measured target. The widest part of a wedge is your measured target, so maybe a little more downside, but you don't always have to play out to that. I just wanted to mention that's what happened there. You broke that, and there's a drop. And of course, remember, this is not coincidence. At the very same time, the dollar hit support. The dollar was falling, right? So gold was rallying when the dollar was falling, then dollar right here hit support and bounced. So that's the dollar bouncing, making gold go down, right? And the euro also going down. So you can almost, I can trade gold blindly by just looking at the euro or just looking at the dollar because of that relationship they have with one another. But obviously all the better when you can line up the support and resistance levels and things like this. Alrighty, next up. What I covered, treasuries already. That's gold. Oh yeah, let's just do cryptos and we'll wrap this thing up. All right, Bitcoin. This is BRR, Bitcoin futures. For your futures traders, 6 months the price history, 2-hour candles. There's a primary downtrend line. You just put in a divergent low right here. And just like you had a divergent low there and you had a rally followed by a divergent high, but this one's been building for a while, and we're really, if you look at it this way, that's just really good support for last, all the way back to June right here, late June. Bitcoin's been holding that level, but the big thing is it needs to break this trend line. And that would be, Bitcoin's been moving in line with the stock market. It used to be a risk-off asset. They said an alternative to stocks. And as I said, that I'm seeing early signs of that returning. But here's what I want to say. For almost all the year, it's rallied with the stock market. So if we break out here and we rally, it's probably going to be with the rally in the stock market. But I wouldn't write off the possibility of the stock market turning down, taking another leg down, and all of a sudden people flock into Bitcoin. The charts are constructive. They've also been constructive on the stock market lately too, with the divergences and all that. But I would say just trade it on its own merits. If it breaks out, it's a breakout. And then that's a buy signal. It takes you up to the next level there. If a breakout fails, the breakout failed. Then you look at support levels that should hold on a pullback, and that's it. So I just wanted to point out it's poised to run. Hasn't done so yet. If you trade the ETF type instrument, GBTC, it's not exactly an ETF. It's similar. There's a bullish falling wedge, and that one did break out, at least here, but you had big resistance right there, and it tried to pop it, and it's hugging that right now, but it came, just put in a divergent low. So if it can rally and watch for the futures to take out the trend line I gave you, which it doesn't show as well here on GBTC, because this thing doesn't do a perfect job. This thing will trade at a premium or a discount to the price of Bitcoin. So you have to take the charts. You can't be as precise with the charts. Even the futures can be, not tracking the spot price directly. That's also a thing there, but I prefer watching the futures, and I'll watch them both. But either way, constructive looking chart, just like the stock market. Positive divergences, and so far in the stock market they've been playing out, and to a little lesser extent so far in Bitcoin. But if the stock market continues a rally, we're going to be back on risk on, and people are going to buy. This was the king of risk on trades, risk off, all year when the stock market was falling. So I would expect this to rally, and I still like it. It looks constructive. And then the ETHE, the other crypto, we'll call it. I don't mess with the the anything other than crypto, Bitcoin and Ethereum. There's your primary downtrend line, just ready to pop right there, right? Looks like it's flagging as well. See that? Looks like a little, it popped this small bullish falling wedge right here. Had an impulsive leg up. Looks to be bull flagging. If it can pop that, it's going to take out the trend line. Also, this is a big resistance level right here, about 1050. So if it can put all this right here in the rearview mirror, that should open a nice run up to that previous high and or that 1658 level. Obviously, you want to keep above these previous lows. This whole cluster here, island cluster basing pattern. And let me give you the futures. ETH. Okay, I don't have this one marked up because the chart on my lines went away on that one. Sometimes that happens, but I do have the actual crypto itself. There it is. ETH crypto, 6-month, 3-hour candles, primary downtrend line right here, just similar to the what I'm just showed you on the ETHE. Although this one has broken out. So there's a breakout and same flagging type action right there. So now it broke out, but here's, remember I always use the term BOD. This is my BOD resistance level, benefit of the doubt. So it broke out, but it ran into the 1565-ish resistance right there. And that's what's capped the breakout so far. So now if it can really just pop above the recent highs, that should open the door. And the measured target's probably going to carry it closer to that 2018 target there, but the next target I have is 1782 right there, which I certainly would expect a reaction. That's pretty good resistance, and that would be, let me measure it for you, roughly 14, maybe 13-14% run to that 782 target if hit. Again, largely but not exclusively dependent on the stock market continuing to rally. So I said the other day I started taking some positions in crypto, and that's, as long as it looks good, I'll trade those on their own merits. Stock market's going to do what it does, and crypto at some point, just like treasury bonds, may disconnect or revert back to their old relationship. Okay, that's it. Covered a lot of things for you there in this video, so let's watch and see what happens. You have the key levels to watch. We have quite a bit of big market-leading FANG stocks at or very near resistance, along with the equity markets. But again, bigger picture is they continue to defend the lows. Bad news is getting shrugged off. It all started with, just a quick recap. It all started back here on that day that really hot CPI number came out. Tanked the markets in the pre-market session, only to see one of the biggest turnarounds in a long time. And since then, the market's been shrugging off bad news, and it's pretty much pricing in that the Fed's going to back off. So it's all up on the Fed now. If they come in more hawkish than the market expects, the market's going to throw a hissy fit. If the Fed does cow down a little bit on their hawkish rhetoric and actions, it's again, actions are what they're going to do. Are they going to raise 3/4 points? Are they going to raise a 0.5 point? And then the rhetoric is, what are they going to say? Are they going to talk the tough talk? I'm sure they will. Well, we're diligent, but it's more of, we plan to continue to raise rates. That's the kind of thing the market's going to be looking for. And again, it's going to be a crapshoot going long or short into the meeting, but we'll see where we are come Tuesday afternoon, Monday before the meeting, because if the market's rallied up to really good resistance levels, it might be objective to put a short position on going into the meeting, or likewise, if we pull back to support, we maybe could go long. But other than that, it's always going to be somewhat of a gamble carrying longs or shorts into the big FOMC meeting. And until then, the market's going to do what it's going to do. Right now, the drift is the current trend, like I said, is bullish, but you still have these previous reactions. That's a big resistance level right there. What is that? 284 and change, because it's that previous reaction high. You had 3 candles right there. You had 1, 2, 3, 4 acting as support there. And so if it can break that, then it keeps the uptrend, the near-term uptrend alive, and it's going to increase the odds we're going to run up to those downtrend lines and maybe the 200-day moving averages. Otherwise, I'm trying to see if there's a clean trend line off the lows. Not really, not so much. Yeah, I don't have a good trend line to watch on the downside. So all we can do is watch these resistance levels and see how the market acts here, and use those short-term charts to kind of gauge where you might be going. This is a 5-minute chart. You can see a beautiful bullish falling wedge this morning. There's this morning's open. That was into the close yesterday. Just like you had a bearish rising wedge here, and then you gap down, and that was that whole downtrend. See, negative divergence, positive divergence. Right now, we're starting to get finally some negative divergence on this 5-minute chart at QQQ there. So, like I said, as I started in the beginning of the video, I favor a pullback, probably right there. That's, I think, a great target if you're a QQQ trader. We'll call it 278, and then we'll see where we go from there. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.